Hello everyone, Shane Newton here with Keller Williams, your trusted real estate consultant with 25 years of business experience in real estate, consulting, and corporate finance. And today I want to talk a little bit about real estate investing and a rule of thumb that is known as the 1% rule. Now, when you're looking at investment properties, it's imperative you look at properties where obviously you want to get a good deal. You want to try to, like most investments, you want to buy low, sell high. That's how you're going to get the gains in it. Now, there are different ways of looking at investments, and the 1% rule is just a quick rule of thumb. And what it basically says is that when you're looking at an investment property, whatever your purchase price is, you want to be able to rent that property monthly for 1% of the value you paid for it. So, for example, if you buy a $200,000 property, you want to be able to rent it for $2,000. Now, it's a good rule of thumb if you can find those properties, and they're hard to find, but you can find them. Now, however, in the DFW market, it's going to be very difficult to find properties of that value. In my particular market, where I do most of my real estate business, the average home price is actually about $309,000, and that's just for an average property. But what we're seeing for leases is you're looking at about $1 a square foot, maybe a little more. So that average price of a home that's going for $309,000, it's probably only a 2,000 square foot property. So getting more than $2,000 a month for that property is going to be a little difficult. So you see the disconnect there on the normal, what you might call retail value of real estate versus investment properties. So the 1% rule is a good rule. And like I said, it's about finding the properties. Now, in this market, it'd be difficult to find those. You can find some of those if you're purchasing homes from the sheriff's sale for foreclosures. You may be able to find some of those in short sales that are going on, where people are trying to just get rid of the property so they don't default on their mortgage, as opposed to going into foreclosure. Another thing to look at, though, may be looking at outer markets around the city you're in, or maybe looking at properties that are in areas that maybe are older, haven't been developed much. You might be able to find some properties where you could invest some money and some capital in refurbishing, maybe rebuilding them, and then taking that property and being able to invest it. But you might also want to look at some outer properties. So let's say if you're in Denton County here, where I'm at, and that average price is $309, well, maybe start looking further north into, Whitesboro, maybe Collinsville, maybe up into Dish or some of those places. A little further out, it might take you an hour drive to get there to see the property. Going out to Gainesville, Nocona, some of those areas might be a little more than an hour. But if you can find properties in those areas, and let's say you purchase it for $60,000, invest about $10,000 in refurbishing it, maybe even $20,000 if you need to, and then you're able to rent that property for $1,000 a month, you're making money. So that would be, $60,000 for purchase, let's say $20,000 investment to, upgrade and refurbish the property. So you've invested $80,000. Well, if you're getting over $800 a month, let's say you can lease it for $1,000, you're doing pretty well, and you're beating that rule of thumb of the 1% rule. So that's a little something about the 1% rule. Now, obviously, if you're looking at properties more in more desired areas where you could probably get higher rents, okay, then you're probably going to have to do some deeper calculations to see if the property is going to be something that's actually going to make you money on a monthly basis. I know I have more of a detailed spreadsheet that I use to evaluate properties, where I go in and factor in vacancy rates, maintenance. I actually go through and fully amortize out what the price of the mortgage would be, factor in property taxes, insurance, and that, and come up with a break-even point to see if the property will actually make money or not. So, a couple of different ways to look at it, and we can go into the more detailed way in another video. But just wanted to cover that rule of thumb on the 1% rule. And again, the 1% rule is for an investment property, in looking to evaluate it, it's can you get 1% of the purchase price for rent each month? Is that feasible? Hope this video helps. Hope you enjoyed it. If you liked the video, hit the like button. If you have any comments about the video or any other topics you'd like to see covered, put those down in the comment section. And if you're watching on YouTube, be sure to subscribe to the channel. We put out a new video every Thursday at noon. And we're also, this week we started a new video market update that we're going to put out each Monday. It won't be at a specific time on Monday, may vary through the day, but we'll do a market update where we look at what's happening in the market and in mortgage rates. Again, hope you liked the video. Thanks for watching, and hope you have a great week. Thanks, everyone.